Hi everyone, welcome to our DebtCircle podcast. In our recent article titled The Missing Half of India's Financial Markets, Here's the Real Tea, we spoke about how India's bond market still remains underdeveloped in comparison to equities. So today we are continuing the same discussion, going beyond the framework and diving deeply into what is going on in the ground. And to join us, we have with us Sanjeev Kumar, Chief Executive and Business Officer at BondVue. Hello, sir. Welcome to our podcast.
Thank you, Sana, for inviting me. It is really a wonderful opportunity, and I really want to thank DebtCircle too to give this opportunity to basically showcase and deep dive into the relevant points which you mentioned and touch base your audience and viewers.
Yes. Thank you, sir. So, for our viewers, this is part one of our series where we will be interacting with him to understand the evolution of India's bond market in our language in a more interesting way. Okay, so let's start with the big picture, sir. At a high level, how would you describe where India's bond market stands today?
So, Sana, if you understand the entire financial landscape of India,
Okay.
at one way you have got issuer, and on another way you have got basically investor, and the conduit is basically the intermediaries.
Okay.
And if you see the broader picture, there are broadly, I think, 5 asset class. One is equities. Second is, definitely under equities, you have got mutual funds. You have got debt, that is a fixed income. You have got alternatives. You have got real estate, and you have got bullion, that is, gold, silver, and so on and so forth.
Yes.
Last 20 years, if you see, there has been a massive growth and massive transformation in mutual funds and equities. But what is a laggard is fixed income, and which is very, very important for the development of entire economy, because currently our entire dependence is on banking lines. That is basically the bank funded, for debt, anyone, is reliant on banks, which the regulators and various stakeholders want to change. And for that, it is very, very important for us. For us, I mean, the players like DebtCircle, the OVPP like us, and the various stakeholders to contribute to the development of fixed income market.
Okay, so that's really interesting. So building on the same, my next question to you is, do you think the gap we described as the missing half, is it narrowing or is it still largely intact?
No, I think definitely it is narrowing, and I am extremely happy to say you that last 3-4 years has been the real, you can say the green shoots for the development of fixed income. And I just want to give you some backdrop and context of
Yes, sir, please.
how the mutual fund market have developed, how equities have developed, and where the fixed income could develop in last 20 years. So if we history of last 20-25 years, the size of mutual fund industry, which was roughly 2 lakh crore, is now roughly 90 lakh crore. That is 45 times jump. Equities also, they have seen the massive transformation and growth. But what is clear, who the asset class that fixed income has lagged behind, and because of 3 reasons. One is the transparency. Second is basically the execution framework, and the third is awareness, which I describe it as a T factor.
Okay.
The moment we saw T factor in mutual fund, we saw massive transformation. The moment we saw T factor in equities, we saw a massive transformation. And for the last 3 years, the point which you are raising, the missing half, last 3 years, post 2020 September, when SEBI came out with the OBPP guidelines, that is called Online Bond Platform Guidelines, we have been seeing some sort of the transformation, which I call it as a green shoots. What are the basic things again SEBI is reliant on? Again, it is transparency, execution, and awareness. So these are the 3 critical components, and I'm very happy, and probably people like us are very happy to see this kind of changes, and we are very hopeful the way we have seen changes in fixed income, equities and mutual funds. It is a matter of time. Next 10 years will be an era of fixed income.
Oh, lovely. So I think what you're essentially saying here is that things feel different today in comparison to last 5-10 years? Can we say that?
Absolutely. Last 5-10 years, I'll not say, but at least for last 3 years, I can confidently say
Okay.
that the changes are very, very evident. Thanks to players like DebtCircle also, because the role of DebtCircle is what, to create awareness. So in last 3 years, if you see, the changes are completely visible, and probably we are very hopeful that next 10 years will be an era of fixed income, which I have been repeatedly saying. Yeah.
Oh, that actually connects very well to my next question, sir.
Yeah.
That was a very interesting take from your end. So what are the most important shifts you are currently seeing in the bond market side?
So there are 4 changes which I am seeing, and that is very, very important. The first change is basically the digitalization process.
Yeah.
Because for the growth of any market, for scale of any market, what is more important is the digitalization. If you are weaving technology with the entire the workflow, the market may see a massive growth. So that is a change which we are seeing, and which we have seen in terms of the regulation which SEBI came out with, and participation of exchanges, participation of issuers, participation of regulators, participation of players like BondVue, and players like DebtCircle, and so on and so forth. So that is the first thing which we are seeing. It is the digitalization.
Yeah.
The second change, which is relevant and visible, is that we are seeing a shift in the issuances process.
Okay.
Today also, if you see, or I think 2 years back, if you go and study the debt market, more than 99% issuances, that happens in AAA rated or government of India securities. But of late, what we are seeing, the issuances in A minus, A paper, and thanks to the sweet spot of Indian economy too, this is very, very healthy change and very pleasant change which we are seeing. That is the second thing.
Okay.
The third thing what we are seeing a change is the issuances of more public issues. Because if you see the debt market, I think again, more than 99% of the issuances were through, or still is through private placement. And if it is happening through private placement, definitely, understandably so, private placement makes sense, because all the issuer, they have got their vested interest of cost of capital. However, in order to reach to the larger audience, it is important to come out of the public issue. So there should be a balance. Between cost and the issuance process, which we have started seeing off late.
Lovely.
And the fourth very important thing which we are seeing, and I'm sure in next couple of weeks or couple of the quarter or months you will see, is basically coming out with a lot of the regulations, which will basically channelize the energy towards mobilization of resources through fixed income, where the bonds come into a foray. I'll just give you an example. Today, for example, if you are distributing mutual fund, you have got a regulation by SEBI that the body, SRO body, that is MFI is there, which is called MFDs, mutual fund distributors. If you want to basically distribute equities, you have got APs in equities, But in fixed income, there is no channelized process, and channelized process is not there, which SEBI and other, the participants, they are contemplating to come out with the FICP guidelines, which is called Fixed Income Channel Partner Guidelines. What does it mean? It means that, there should be a norms and there should be a regulation for the intermediaries, and there should be a certification examination process for that, which is there for mutual fund in terms of 5A, and even for equities, you need to pass certain, the certification program. So this is very, very pleasant change which we are seeing. So if you combine these 4 things, trust me, I think we are forming a very, very sound narrative and sound, fundamentals for the growth of fixed income.
Excellent. So, sir, what you just said is something that not a lot of people talk about. So, on the same lines, we are also very intrigued to know that is this phase more cyclic, or does it signal a deeper structural transition?
No, it is not cyclical. It is a deeper structural changes. And why I'm saying this is a deeper structural changes, it is because of the participation of various stakeholders. Whenever you see a structural change can only happen if you see participation from various stakeholders. Who all are the stakeholders? Number one, regulators. Number two, exchanges. Number three, rating agencies. Number four, issuers. Number five, brokers. Number six, the OBPP players like us. And number six, investors. Yeah. So first time we are seeing these, the seven pivotal points are confluencing at one point. And to give you the right context or to set the right context, maybe, along with NSE and BSE, they recently came out with the tagline of OBPP Association. For example, everyone knows the tagline of mutual fund, that is mutual fund sahi hai. But nobody knows, the tagline of fixed income or bonds, which is, bond ek sashakt bandhan. So that has been possible only because of the participation of all the stakeholders. And if that is so, that cannot be a cyclical in nature. That can only be because of the structural changes.
Excellent, excellent. It is so good to know. Bond
एक सशक्त बंधन.
Bond एक सशक्त बंधन है.
Yes. Strong
bond है. Yeah. Perfect. So, sir, with all your experience in this field on ground, we are also very curious to know what has surprised you particularly the most in how the market has behaved in recent times.
Oh, but what has surprised me significantly, I must say, I think the changes that I have been seeing in last 2 years at least, the participation of retail investors, that is massive. The number of transactions on RFQ platform that used to be in 100, today they are now touching more than 5-digit every day.
Wow.
So that is a very, very surprising element for me. It means that a lot of investors, they are showing interest in fixed income, and there are multiple reasons behind it. Definitely volatility of equity market has also added to that. Participation of all the stakeholders, definitely creating awareness by various OBPP including us. So these are definitely some of the elements, but the surprising fact is the output which we are seeing in terms of number of transactions of RFQ. That is the most surprising element. The second surprising element which I am saying, definitely it has surprised me a lot, because we Indians tend to live in inertia. So having seen 20 years, I think people started losing hope that this bar bhi hoga, nahi hoga. But first time I am seeing again that there is a participation and wholehearted participation from all the stakeholders, and first time from government too. There is a clear-cut indication and direction from government to basically develop the corporate bond market. So these two elements have surprised me personally. And I am sure the way we are going, we'll see a lot of stages in the overall growth path. We have seen the same, the staging in mutual fund too. Mutual fund growth, what I told you, from 2 lakh to 90 lakh crore, it has not happened in one day. Definitely, there were various phases, there were various, regulatory pushes, there are various initiatives taken. So similarly, I think the way things are unfolding is a matter of time that this market will grow significantly. Yeah.
Oh, that is so good to know. Very assuring also. So like you mentioned, participation from all stakeholders is what is adding to our arc of growth. So on the same line, sir, let us try to dive deeper into the market reality now.
Sure.
So where do you see the biggest gaps today? Is it liquidity, pricing, or it is about distribution?
No, very frankly, you can't pinpoint on one.
Okay.
In order to develop any broader asset class and do the structural change, you can't pinpoint on one part.
Okay.
You have to do 5 critical things simultaneously.
Okay.
If you really want to develop this market and to ensure that this asset class should develop significantly. What are those 5 things which we need to take care of? Number 1 is basically the issuances capacity. Means more and more number of issuers should come forward to raise money through corporate bonds.
Okay.
That is the first. And we have started seeing this kind of the cycle. And why they will do so? They can only do so if they get confidence that they can raise money and raise money at relevant cost. That is the first thing.
Okay.
The second, which is very important, is basically the technology platform, which will bring the transparency, which will bring the price discovery, which will bring, more and more number of people to the fixed income market. So that is the second thing, which definitely add to the distribution too, because unless until you have got a physical and digital distribution in place, you can't develop a market.
Correct.
See the example of mutual fund and equities, which I have been repeatedly harping on. So the distribution is the digital distribution, and the physical distribution is the second part.
Okay.
The third part, which is very critical, and probably most of the people are ignoring that. And probably I must give credit to DebtCircle for that, the way they are coming out with various articles and doing, the podcast and coming out with, the various medium to touch base to the customer and various participants. Yes. It is really heartening to see that is awareness. So awareness can only be created, by not by one stakeholder. It is a responsibility of all,
everyone.
And definitely more to do with the issuers and the brokers. So awareness is the third part, which is very critical, for the development of this market. So if I combine all these things, again, the framework is very simple: T, transparency, execution, and awareness. And the fourth, which I missed, is the regulatory push, which we have been seeing, from the regulators. Yeah.
So this is very enlightening for us, and I'm sure for our viewers also to know. And thank you, of course, for your compliment. We are grateful. So my next question to you is, our viewers would very much like to know, is liquidity in corporate bonds structurally constrained, or is it improving?
It is improving, but not to that extent which we expect.
Okay.
Because for still, if you see, the fixed income market is a very illiquid market. Forget about corporate bond market. Even if you see Government of India securities and state government bonds, which is supposed to be highly liquid, but the liquidity is there in only, select securities. It is not across securities. So definitely, but the liquidity is a constant for corporate bonds too. Now the problem is not, that is a constant for any market. The answer lies in what should we do, because these are the pain points, and for resolution of any pain point creates the market.
Correct.
If, for example, people like us are resolving any, the pain points, that creates and develops the market. So how we can resolve the pain points? We can only resolve the pain points by doing 2-3 things. One is, as I told you, awareness. So engaging with various, intermediaries and ensuring that, right kind of knowledge is getting transmitted to these guys who further, can transmit the knowledge to investors, so they can take the adequate and informed decision of selecting the securities and participating. Number two, the moment more and more number of, the investors will come into foray, there will be diverse opinion, and whenever there will be diverse opinion, liquidity will automatically get created. That is the second point. The third point, which is very important, some of the regulatory push like market making or some of the norms, I'm sure, which will eventually come. So that will also, create, some sort of, liquidity. The fourth factor, which is again important, is basically issuances by public issue. So if you see more and more, the issuers are coming with public issues, then by doing so, subconsciously, a sort of, the awareness bed is getting created, So if these are the things which are happening, then probably the liquidity, which is supposed to be constant for the development of corporate bond market, that will not be relevant eventually, I can just give you an example.
Yes, sir, please.
Way back in today, mutual fund industry is 90 lakh crore. Go back to 1997, 98 when I started my career. At that point in time, equity mutual fund was not the first choice. The debt mutual fund used to be the first choice, Just ensuring or convincing investor to come into equity mutual fund used to be a very, very challenging task. But I think over a period of time, things have progressed in a staging manner. The factors which I told you, I think, the transparency, creating awareness, and regulatory push, coming out with the different plans like regular plans and direct plans, all these contributed for the development of, the mutual fund market. So similar things, we have started seeing, some bubbling, stuff is happening in fixed income too. And if in the same ecosystem, equity can develop, in same ecosystem, mutual fund can develop, then why in the same ecosystem fixed income will not develop?
That's a very rare insight our viewers will get on this particular subject. So now from the investor's perspective, how should investor think about credit risk in the current scenario with the things happening around us, rather in the world around us?
A very relevant question, because whenever you see if there is an emergence of any asset class,
Okay.
and if it is not fully regulated, some incidents or some accident definitely happens. And we have seen in 1992 what happened, in 2000 what happened, even for example, some debt crisis has happened in India, mutual fund debt crisis after 2008 subprime crisis that has happened, and all these things have happened because of evolution of the regulations. Okay. So today also, I think, if we are developing the fixed income market, it is important that we develop in a very, very regulated framework. So definitely in what investors should look at the rating, issuer credibility, who all are the advisors who are advising, these are the critical, the components one should look at. But that may not be enough. However, I think investors, once they come into market, typically they should start with AAA rated bonds. They should start with Government of India securities. They should understand that these, the products are very safe products and can definitely generate better alpha, better, the returns than typical conventional fixed deposits. Once they understand that, and then they will start learning the nuances of the fixed income, which includes rating, which includes credit risk, which includes interest rate risk, which includes understanding the various intermediaries who are advising, which includes the understanding of process. So that is not a one-day job. That is basically that is a graduation process. कोई आदमी जो है कक्षा 1 से लेके तुरंत जो है वो intermediate or graduation नहीं करता है. I think it is a process which gets evolved. So similarly, once you are developing a fixed income market, it is a graduation process, and this will only happen if multiple influencing points will come and consciously, subconsciously, and by default or by design, this graduation ladder will emerge, and that will help investors to learn more and participate more.
Yes, this is a very precious input, that they say Rome was not built in a day. Certainly, in a similar way, what sir is also saying is things will gradually have improved and will keep on improving. And as long as all things are confluencing in the right direction, we can expect things to get better.
At one point,
yes, sir, please.
Sorry, Anna, to stop you.
Please tell, sir.
You see, fixed income is just an asset class.
Okay.
Any investor, they will make money or they will lose money, not because of what they are doing, because of the wrong uses of assets. How they are using the assets, that is very important. So it is very important in that context to understand, and I encourage all the the viewers and investors to first understand their risk taking capacity. Second, their cash flow. Third, their goals. And after that, they should decide the asset allocation. Once they do the asset allocation, then they should decide that in asset allocation, for example, if they have got Y component or X component in debt, then they should decide that under debt, whether they should participate indirectly through mutual funds, whether they participate directly through corporate bonds or Government of India securities, or if they are family offices or high or ultra high net worth individuals, and they want to take some bit of risk, they can go to the private credit and so on and so forth. Definitely, there are certain parallel products like REITs and InvITs, which is also not a fixed income, but definitely that provides some sort of a stability, to the portfolio. So, what is more important for an investor is to understand their risk, their cash flow, their goals, and accordingly they should decide the asset allocation. Accordingly, they should decide in which products and which segment they should participate. This is the framework. Unless until we stick to the framework, we can't build a portfolio, we can't make return. Just thinking unilaterally or thinking that I must invest in corporate bond, that is not a right way of thinking. It is very important for us to have a design framework.
Absolutely. Such a precious insight. So now moving to the participation side, we would want to know from you, is the bond market still largely institution driven, or we can say that now the participation of all the people, like in your words, the stakeholders is broadening?
No, still it is institutional driven.
Okay.
And institutional driven to such an extent that even institution today, they love to participate through telephonic market. It's irony because, still, institution, they love to participate through OTC medium, the telephonic market. I'm sure things will evolve and things will change, not immediately, but things will change. So if on gross basis, if I say still it's institutional driven, but as I told you, last 2-3 years, we have been seeing some changes and some positive changes in terms of participation of retail investors, coming more and more, the issuers are coming, in the market to raise resources through corporate bonds by public issue and private placement both. These are certain heartening and some positive changes. So, but still it is institutional driven, and that is why we are here to solve the problem.
Bridge the gap. Yeah. Excellent. So I think that already answers my next question. Do you think, apart from what you just mentioned, there is something that is still holding back the wider participation that should be and that is still not there?
Yeah, I think a very valid point. Two things.
Okay.
One is the right set of regulatory norms for distributors.
Okay.
Still it is missing. Because, for example, if I have to distribute, if I am an intermediary, if I have to distribute mutual fund, there is a clear-cut guidelines. There is a clear-cut, certification or examination process. That is not there in fixed income. So unless until you have got a right kind of framework or right kind of regulation, you can't create awareness. So that is the first thing which is missing. And I, through your podcast, through DebtCircle, I request regulators and all your stakeholders, and definitely viewers should know that this is very, very critical. That we must come out with the right set of guidelines for a distributor. That is one. The second missing point is I encourage and request all the participants to basically contribute to the awareness program. Just to set the right context, you'll be surprised that in mutual fund you have got IAP, Investor Awareness Program, and some basis point has been allocated to create, awareness in mutual fund. That cannot be done in bonds because of a number of reasons. But there can be some methodology, can be created to create bond awareness program, where all the participants can join hands and resources can be created to create some sort of awareness. That is a missing link. We must do it, so that more and more investors should participate. The third part is definitely as we progress, more and more issuers will start coming into the market. So if these three things will start coming into play, I'm sure the missing link which you are talking about will be bridged, will be resolved, and the broader picture which we are seeing, will get created for sure.
Oh, that really puts things into perspective, sir. So in the same segment, we also want to know, are you seeing any real behavioral shift amongst investors towards fixed income in past few years?
Yes. That is very valid point. If you see post-COVID, then we have seen one way upswing in equity market. But, we have seen two kinds of volatility also. 2021, we have seen volatility. I think market has gone down. And just, recently because of Iran and US war, we have seen volatility. So Indian psychology is that they want to preserve capital.
Correct.
They definitely don't want this kind of volatility. So the perception that only equity can create wealth, now perception is basically getting changed, and now people are focusing more and more on asset allocation. And thanks to, even if you see silver and gold, they have risen to such an extent. So now people have started understanding the value of asset allocation too. So I think that is the positive change which we are seeing, and because of which a lot of investors have started participating in fixed income, which provides stability to the portfolio.
Okay. Very interesting point to note, sir. So on a related note, let us try to see what lies ahead of us on the road on this path. So according to you, what are the key trends that will define market over the next few years?
So the trends, as I told you, that the trends basically, whatever points we have discussed,
Yeah.
that will define the trends.
Okay.
So that will definitely bring lot of emergence of lot of bond advisors.
Okay.
Today we have got mutual fund advisors. There is no bond advisors.
Bond advisor.
Globally, if you see, you have got different kind of advisors. You have got retirement planning advisors too. So we will definitely see a very segmented set of the advisory which will come into force in India. So that we'll surely see. That is one the trend which I am seeing, and probably that will only happen if the right set of regulation will come into picture, the awareness will come into picture. So that is the first part. Which I'm seeing. The second part which I'm seeing is basically still on platform, the RFQ platform or the OBPP platform, a limited setup on a broader level. If you see, even the participation is limited right now, because even if it is in lakhs in a populace of 140 billion people, I think this is minuscule. I think in India, 65%, 70% of your money in fixed deposits. These numbers are very small and irrelevant. So we are seeing a broader and very massive participation in coming times on the back of awareness, on the back of regulations, on the back of the various parameters which I told you. The third part is thanks to after COVID, I think people of all age bracket, their adoption of technology has gone significantly. I can give you an example.
Yes, sir.
My mom was just before COVID, she was not knowing how to run mobile functions. But after COVID, you have got a different kind of mindset. The people of all age, whether they are in 80s or they are in 70s, they are in 60s, they have learned the social media, they have learned the mobile, and this penetration in some way or other will definitely translate into financial intermediation too and awareness too.
Wow.
So I think we are seeing a different kind of mindset shift in India. And I'm sure today our per capita income is at around $2,500 or $3,000. And the way our economy is growing, the consumption, the saving potential is growing. We will definitely see more and more money flowing into consumption plus investment too. And definitely if it is investment, then definitely fixed income. So seeing our populace, seeing our the fixed income market, we are still scratching the surface.
Yeah, this is precious information. On the same lines, what do you think needs to happen for the bond market to truly scale alongside the volume of equities?
You just focus on three things: transparency, execution, and awareness.
Yes, transparency, execution, and awareness.
मतलब
Yes.
सुबह की चाय आप वैसे ही अगर चाय लेती है तो आपकी पूरी दिन अच्छी रहती है.
Correct.
Similarly, if you are focusing on tea,
wow.
everything will be sorted.
So that's the tea for today. The tea is transparency.
Is the transparency, execution.
Very, very important. Viewers, I hope you are making a note of this. And I think a little more into the same on the road ahead part. What risk do you think the market is currently underestimating?
So market is underestimating, very, very valid point, the credit risk.
Okay.
So people today, any products which are coming, they are getting sold and without understanding the risk involved.
Okay.
So as you know, there are, one of the critical element of corporate bond market is the credit risk. So investors and definitely credit rating agency in some way or another define that. However, I think it is the responsibility of all the stakeholders to ensure that right kind of credit rating should be evaluated, and accordingly right kind of the products should be given to retail investors. It should not be missold. So I think the credit understanding the credit rating and mis-selling market is not really understanding that. Probably it is our responsibility to ensure that.
Yes, that's very, very true. Very, very important. So before we wrap today's conversation, I would like to know your views on these two things. One is, do you believe India's bond market can eventually become as a mainstream as equity currently? Equity markets?
Answer is yes. And very simple.
Yeah.
Whatever happened in global market, it comes to India after 20 years. See, a pattern of lag effect is there in India. Mutual fund market was very developed in US, so to say, or developed market. That has developed in on
India.
a point of already almost developed. Equity market, it is one of the most compliant market in the world now in India. If you draw, fixed income market is a bigger market than equities. The size of market, you won't believe, it is massive. I have got some data points.
Yes, sir, please.
And just I'll read it for the benefit of your audience.
Yes.
Japan, the total debt market size is $12 trillion. United States, $33 trillion.
Oh.
Eurozone, $13 trillion. China, $20 trillion. And India is only $2 trillion. Even Brazil is $2.5 trillion. So if you compare with other developed market, we are just scratching the surface.
We're just beginning.
And seeing the size of our economy now, we are in top 5 economy. Definitely after rupee weakening, we are in top 6 now. But definitely we'll say that we are in top 3, top 4 economy of the world. So seeing that, I think $2 trillion versus $33 trillion of USA size, I think sooner than later that lag effect will surely come. So the point which you are raising, will it surpass equity market? Absolutely, it will be bigger than equity market.
That's good to know. So you mean we are very close to that happening? Or it will take some time.
Very close, but it will not happen tomorrow. We must think for next decade. Any change or transformation happens in decades. So we must think of decades to see this kind of transformation.
Very nice. Very, very good to know, sir. And my last question to you, can you tell us one thing that you think participants should closely watch going forward in today's scenario? And of course, with your predictions about I think participants,
definitely I assume that all the participants are investors. Or even if they are stakeholders in their individual capacity, they are investors. So I just encourage everyone to basically adhere to the asset allocation.
Okay.
And if they adhere to the asset allocation, there is a place of fixed income in everyone's portfolio. ये हो ही नहीं सकता कि आपके पोर्टफोलियो में फिक्स्ड इनकम का प्लेस नहीं हो। अगर आपने सारा पैसा फिक्स्ड इनकम में डाल दिया है तो भी गलत है, आपने सारा पैसा इक्विटी में डाल दिया है, दैट इज आल्सो रॉन्ग। देयर शुड बी अ राइट एसेट एलोकेशन एंड यू शुड adequately diversify that. That is the first thing which I want to draw the attention of your viewers and investors. The second important part is that whenever you are taking any decision, just consult the right people or do the right research and do it in a manner that you take an informed decision.
Informed decision, yes.
Rather than, just what your neighbors are investing, what your colleagues are investing, or getting, swayed by behavioral psychology and you become greedy and fearful, and that translates to doing the wrong or choosing wrong asset class and wrong investment. Rather than doing so, if you do your homework, you will take a right decision. So asset allocation and informed decisions. And there are various critical components of informed decision. So these two are the critical points which I request all your investors, viewers, to basically stick to.
Yes. Thank you so much, Sanjeev, for this excellent insight and very, very practical, intriguing points on this subject. And viewers, this is just part 1 of our conversation, and we'll be coming up with a series of podcasts with Sanjeev on same topics and topics around this. So stay tuned to DebtCircle, and once again, thank you so much for your valuable time and such good insights for our viewers. Thank you, sir.
Thank you, Sana. Thank you, DebtCircle, for giving this wonderful opportunity and platform to basically passionately drive this initiative. And I'm really thankful to DebtCircle because the kind of work they are doing, it is stupendous, it is marvelous.
Thank you.
And I'm sure I'm looking forward for your series of podcasts through
Yes.
which, I'm sure all the doubts, all the queries, and whatever in their mind that can be answered.
Yes.
Thank you.
Yes, thank you. Viewers, now that sir has mentioned, if you actually have some queries about our discussion today, please do not hesitate to leave us comments on our video, or you can message us on our social media portals also. Thank you once again for watching. Thank you. Thank you, sir.
Thank you.